Hello, hello, hello. So, how's everybody doing? Hope everybody's having an awesome weekend. This is 50 Pips in the House, 16th/03/2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact you're listening to these means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis for educational purposes only. So, what's going on, guys? So, welcome to the review here. I'm gonna try and keep it pretty quick and simple as usual. Now, this week's going to be slightly different to last week because last week we said was a fairly muted week in terms of data flow, except for, of course, the event risk we had on from the Ukraine. Going into this week, really, we do have some interesting data points. Most notably, we'll have to wait for Tuesday for ZEW for the EU. Then we've got some MPC stuff on Wednesday, but really it's about the FOMC statement on Wednesday. There's some other data points throughout, but it's really the main event risk is going to be the FOMC. So keep an eye for that. That's going to be the main event risk, of course, barring any developments in the Ukraine, right? So what's going on in terms of charts. So let's look at a couple of things quickly. Let's just this week let's pop back and look at a couple of futures contracts. So what's going on the ES? So basically ES, we got a sell-off. It looked like it was holding very strong, and then like these things tend to happen out of nowhere really. It starts to accelerate to the downside, and then everybody's wondering, well, what happens? What we say in these kind of scenarios is we grind higher, it's choppy until we don't, and then everybody starts to wonder what's going on. All in all, it's still a healthy retracement here. As we kept on saying, it kept on looking like this had to fail from higher levels, and that again the odds were for a quicker move to the downside than the upside. When we had this whole action here, we said it's fairly rare for this to completely fall out of bed from a horizontal pattern. Even on the sell-off, we'd expect this to find support and fail from a bigger level, and that's what it's attempting to do. Okay, in terms of levels, what I'd be focused on here going into the week, as it has been trading relatively heavy, and this is the first time where we just haven't had like one big day of sell-off and then pause. There seems to have been a constant stream of selling here, so everybody's going to be focused on how we open out to see if the sell pressure continues. Now, going into the week here, what I would be focused on is basically this whole 1839 into 1850, right? And as long as we hold below, then this will probably tend to trade relatively heavy, and we'll probably see the market try to attempt to make a move back into the 1800 level. Now, what you have here, a lot of people will probably be talking about this high from end of last year. This is probably coming in. This is coming in, I think, 811, right? So if you see people talking about the 811 level, that's 1811. Sorry, that's what they're going to be focused on. Also, if memory serves, I think the 100 moving average on the daily will be lining up inside this zone. So that's also interesting. On top of that, speaking about confluence, another interesting level here about that whole zone to the downside is that is pretty much the 50 back retracement for this most recent leg higher. So I think there's going to be a lot of focus here, and most likely this will probably open the week and will probably be some kind of sell rally mode, and I'd expect the bears to try and get this back down into those 1811 1800s, but I would suspect to see buyers coming in there. If we don't see any buyers coming in there supporting that level, which is a very strong level, then I would not be surprised that this retracement starts to get a lot more legs and then potentially move all the way back down into those lows. But in terms of base support going into the week, I would be focused on that whole confluence zone of that previous high, the 100-day moving average coming in here, the 50 back, the 1800, etc. So this is going to be very interesting support. Now, if we can't hold any strong pressure below these 1840s, 1830s level, then expect this to try and slowly make its way back into the whole 1870s level and all the way back into those highs. So equally, going into the week, I really wouldn't be surprised to see this make a quick move back into the 1800 or all the way back into the 1870s, 1880s. So the way I'm looking at it is, 1850s pivotal for move back into those highs or retracement back into that key support level. So that's something what I'll be focused on the ES. Okay, in terms of gold, what's going on gold? So very nice action on gold. We've talked about this a gazillion times, so I'm not going to bore you. Anybody can go back and look at the all other recordings. We've done this, we've discussed with this in detail, but basically what we're looking at here, we're looking at this basically double bottom formation here, unable to trigger lower, and we're looking for this to be a strong cycle bottom basically for a rotation back up higher. We're looking for starters for the 1400 levels, and we're pretty much moving there now. There'll be a lot of people talking about inverse head and shoulders, all kind of patterns. I don't really look at that, but if you see people talking about the whole 1420s, 1430s, basically they're looking for a break higher to basically validate that double bottom. That's not really how we look at things, so we're not focused about that, but I got a lot of questions. Basically the way we're looking at is we've put in this double bottom, we're looking for rotation back into 1400s and all the range shifts we explained in the previous videos, and this is the level where the bears have to come in to smack this down and hold this lower. If we start to break above this previous supports resistance zone that got sold hard, then we would expect to see continue this rotating higher, potentially all the way back into those 1500s, 1550s, etc. But that's what we're focused on right here. So no change on gold. And then what's going on crude? On crude, interesting, very choppy again. You know, a lot of event risk. What we were looking at on this, you know, our broader outlook on crude, basically since last year, the end of last year, we were looking for this to put in some kind of bottoming pattern to go back into the 110s and higher potentially, you know, as this whole level being a big swing low, cycle low, similar to gold. And once we move back above this 200 on the daily, we caught a very strong reversal candle here, very pure move that couldn't get any legs. We just got sold off back on the retracement here. And where did it move? So our hypothesis here when we caught a bid at the 100 level was, as long as we hold above the 100, we expect this to try and rotate back into the 107s. If we get a daily close below the 100, we'd expect to see a move back into the 98, 96 zone fairly quickly, which is the 50 back of this most recent move higher, and that's exactly where we came, and that's what seems to be holding. Okay, so going into the week, basically our outlook will change, has changed now, and we're looking at this whole zone as a big pivotal level. So if we hold above the 96.50s, then we'll expect this to try and make another stab back higher and continue this move in extensions to try and move back into that 105s and complete. Still no change with this higher target here at the 108 levels. However, if going into the week we can't hold the 96.50s, then we'd expect this to potentially try and accelerate in a heavy fashion all the way back down into the 91. So that's what we're looking at on crude. Okay, so there goes the future. Let's look at a couple of the Forex pairs. What's going on the Forex world? So basically, first things first, because a lot of people have been asking me comments about yen. I mean, I'd like to say one thing to keep an eye out for with all this Ukraine risk on the wires, clearly yen and CHF. I don't think the CHF charts are particularly interesting. Of course, Euro CHF, don't forget the floor. Keep an eye on that. USD CHF is going to be interesting if we see any official buyers coming on any more weakness. Really, on USD CHF is not something I'm trying to catch unless I see some aggressive buyers coming in. And in terms of Euro CHF, you can keep an eye on it. But again, unless, you know, we see these concerns from Ukraine, Russia easing off, and you probably see a lot of flows going back into, you know, Russian assets across the board. You can keep an eye on the ruble if you want. You know, I wouldn't be trying to catch a bottom. I'd wait for some kind of confirmation there before looking to trade those. So I'm not too focused on those. I think the yen charts are a bit more technical, so that's why I'll look at them here. So basically what we're looking at USD JPY was basically this whole congestion zone, this previous resistance. And what we said is once we broke up, this was really key. We needed to hold above this to continue to try and move back into those 103s, 104s. And we tried to make a run for it. But then again, in the current scenario, you know, we started to crumble back down. And the moment we broke back here, we said last week, you know, back below opens the room for a retest of those lows. And bam, that's exactly where we are. And we're hovering here, right? So going into the week, of course, what you want to look at those previous lows here is this support is going to extend, and we might continue to press lower, but I would still expect to see a lot of strong bids, whether official, semi-official, whatever you want to call them, but I'd expect to see strong bids trying to support any kind of aggressive sell-off. I don't think there's a lot of edge playing this unless you see some strong flows coming in, but at the moment I'm looked at as the key base support for the week, and then to the upside, again, that previous resistance, that pivotal zone remains the same, okay? Now, on Euro JPY, what's going on Euro JPY? We're pretty much still stuck. Remember, we kept on talking about 139.00. That was our key level, right? And then once we broke to the upside, we said the next level, there's 140.90s, break above, and we're looking for this to continue to extend and make a move back into the 145s, 146s, break new highs. So again, we know what happened, geopolitical risk, etc., you know, yen catching a bid. We move back down. So watch this, no change, really. 140.90s, key area. If the bids don't support, expect this to come back down and try and make a move for the 139s, as long as we get daily closes above this level intact for a move back higher. So that's what I'm focused on here on Euro JPY. The chart's pretty nice, pretty technical. All the levels remain the same. What's going on Aussie? What's going on? Well, some pretty decent two-sided action here in the market, which finally is interesting here. What we're looking at, again, 91.90s. We call this chop zone. We call this much to do about nothing inside this area. Basically, what that means that if you're trading intraday, the edge is to try and fade these zones and play for the market to stay inside these zones, not necessarily to play the breakouts, because there being a lot of choppy action outside, so you need to see more confirmation. So what we're focused on, and again, you know, it's been decent during the week, you know, fades into the 91s, paid, and the buying into fades 90s, moves down, paid. So interesting action. What we're focused on is still the same. Is this attempting to rotate higher? Are we going to correct? What we focus on is the 90 level. Daily close below, we expect this to try and make a run for 88.80s, but caution, don't forget you're going to have this 200 on the 4-hour, but clearly close below the 90s on a daily, very heavy. Again, don't forget lower highs here. The bulls tried to make a good run. The bears whacked this down. It could still be holding okay for the bulls, but if we start to close below the 90.00, heavy into the 88s. On the other hand, if we get a daily close above the 91s, we expect this to try and take a stab at those highs very quickly and continue to break higher. However, caution on the break higher, because if you flip onto a daily chart, what you have up there, you have that whole 91.50 level, which has that 200-day moving average coming into it, which has been a formidable level so far. So that should be strong resistance, okay? So into the week, the strong resistance of this 91.50s, the strong support is at the 88.80s, and inside that, what we're looking at is chop zone inside those 90s, 91s, okay? So still, I think the chart's fairly clear here. What's going on Euro and cable? Let's do cable first. Cable. Choppy action. What did we say last week? What have we been saying for a while is we said the rotation to the upside is still intact, even though this is trading very heavy, and we expect this to move very choppy inside this zone. Don't get confused about velocity of move inside range here. There are going to be a lot of trading opportunities, clearly, but we said, and we've been saying a lot of these updates, unless we get a daily close above the range, or unless we get a daily close below the range, we see this as choppy action, sideways chop to potential still to break higher. So that has not changed this week. We've seen a lot of choppy action. Clearly, the bears have taken aggressive stabs at this. They haven't managed to get any traction below those lows. So again, for me, the odds are still at the extremes, similar to Aussie, fading the highs, fading moves into lows, and that's what's paid last week too, okay? So no change. You need to get a daily close outside this range to see more continuation to likely give us cues on the next move. Break to the upside, we're looking for those 170s. Break to the downside, we're looking for 164.50s for starters. Still choppy inside the range. Not a lot has changed, okay? What's going on Euro? Euro, we talked about this. So, we're still looking for Euro to move into 140, 141. We've been looking for that to print since last year. This is a very, very big move. We've talked about it in a lot of the other videos. There's a multi-confluence of a fib on the weekly or on the daily, so I'm not going to go through that again. But what we also said is after that move higher, right? We said going into the week, we suspect unless we trade below the 138.20s, 138.00 level, it's going to be very difficult for this to get traction to the downside because basically this was the breakout zone. All the guys who are long probably trailing stops somewhere below this zone. So as long as we don't test below that zone, the market is not going to put any longs, is not going to test any longs. It's just going to be taking out weak players inside this range, and we expected this to break higher, print new highs. We came back down. We came in, bam, we held like a champ. Buyers supporting this, long supporting this zone. No stops challenged at all. Came back again, bam, print new highs. Then what happened? We've got, geopolitical risk. We had Draghi coming in, a little present to the bears ahead of Christmas. It's still a while to go, but it was a nice little present. Trying to talk it down, bam, we came back down. But what happened here, once again, buyers coming in. The bid tone is still there, right? So the bids are still supporting. So again, if you keep on looking at this and wanting this to die as soon as it prints into these lows, you cannot, it doesn't pay to get very aggressive in front of a brick wall before a range break, right? So here, it's just been a buy on any dip here, and that's been the trade of the week, right? Apart from some selective shorts intraday. And what's happened here, bam, we're right back into this whole zone. So going into the week, watch to see how this trades into the beginning of the week. And again, don't forget Tuesday we've got that ZEW, so that's going to be interesting to keep an eye out for. So clearly this previous resistance zone we looked at here, if this, as long as we hold above, that's going to continue to stay fairly well bid, and we expect this to continue to rotate higher, to try to take a stab at those highs and ultimately move back in that whole confluence of targets to the upside. So above, this serves as support for a continuation higher. If we trade back below early into the week, expect the bears to continue to try and take a stab at those supports at that lower level. But unless we trade and we get a daily close below that whole 138.00 into 138.20, it's probably going to continue to trade sideways, chop to grind higher, right? So that's what we're looking at, no real change. So I hope you enjoyed the review. I hope you enjoyed the content. Again, if you like this stuff, please don't be shy about sharing it, retweeting it, or liking it, or whatever. I hope everybody has a great rest of the weekend wherever you may be. See you guys tomorrow for London Open. Have an awesome one. Thanks again for listening, and talk to you guys soon. Take care. Bye-bye.